Elections are historically a catalyst for volatility in the market. And according to our next guest, there is a risk to this election that investors maybe aren't quite pricing in yet. I want to bring in Rob Hocking. He's the head of product innovation at Cboe. Rob, it's great to have you here. So here we are today, just about 2 weeks away from Election Day. You've got the VIX sitting below that 20 level here. What is it? Are investors missing something when it comes to the real risk here ahead of the election?
Well, yeah, thanks for having me this morning. I think what's great is just this past week, Cboe hosted its 39th annual risk management conference. And one of the big themes coming out of there were two things. It was just uncertainty and hedging in the market were two very common themes. I think what you're seeing right now is uncertainty in numerous ways. You're seeing geopolitical tension coming in. That's having an effect on oil pricing. You saw the oil VIX, ticker OVX, is trading roughly, call it 15 balls over its year-to-date average. You're then followed up with, Fed risk that everybody's pricing in. Will the Fed be able to continue that aggressive easing pace that they've had, or are they going to have to pull back from that? And then lastly, it's that election risk like you talked about. And so right now we're seeing in SPX options, we're seeing roughly, call it a 3-vol premium being priced into the November 6th options as opposed to the November 5th options, kind of capturing that uncertainty in the election. And then previously we had seen a drop off in the curve from there, kind of indicating that a contested election wasn't really something the market was pricing in. That since has changed, and now the curve is much more flat post-election, kind of implying that there is some risk to maybe a contested election and where we go from here.
Do you think investors are accurately pricing in that risk at this point, Rob?
Well, after being a former trader for, call it 20 plus years, I rarely bet against the market. I think the market tends to get it right when it comes to committing, capital to trade. And so one thing the VIX is good for is that it uses actual bids and offers in the marketplace. So that's where investors are standing, committing capital, ready to trade. And so I think it's a good indicator. We have numerous VIXs out there that give you different kind of time horizons to the profile of where you're looking for that uncertainty. We have a 1-day VIX, a 9-day VIX, the benchmark 30-day VIX. You then have a 3-month, 6-month, even 1-year VIX to kind of get an idea of where the market is pricing in that risk.
Right. What is the VIX telling us right now, Rob, about how long a potential contested election should last? Or could last?
Like I said, I think that the term structure coming into October's expiration last week was still in that backwardation. You had a big vol premium spike that was measuring that kind of election uncertainty, and then from there it faded off and it came down much more towards that historical long-term average. So right now I think that's the theme. It's the uncertainty. The market's not exactly sure where we're going to go or how long it's going to take to have an election result, and they're pricing in that uncertainty right now in the option pricing.
So Rob, just give our viewers a better idea when it comes to that uncertainty, when it comes to the potential here for this massive surge in volatility, if in fact we do get a contested election. More specifically, what does that look like?
So right now it's a VIX curve that kind of is upward sloping. So the long-term, call it historical average, is between 18 and 20 in VIX. Right now you're seeing about a 2.5% to 3% vol increase or premium being priced in to that election. And then from there, you're seeing that implies about a 2.5% move on election day in the market. So call it a 150-point move. That's what the market's expecting. Now, whether they're right or wrong, we'll see. But from there, you're seeing kind of an upward sloping VIX curve from there, just pricing in that uncertainty between now and year end. So we'll have to see how it plays out.
So Rob, let's say we have a contested election, we have a huge spike in volatility. What is it that brings investors back to earth and leads us to a place where, the investors who've been shorting the VIX can celebrate?
Yeah, I think it's that known. Once you get that data point of what's known in the market, what the election turnout will look like, then people come back, and the VIX is a mean reverting instrument. So you tend to see vols mean revert to that long-term historical average over time. And I think you'll see that after this. After the market settles in, we'll move on to the next piece of information or the next data point on the horizon where people will start to price options around.
Rob, give us an idea of activity just following the 2020 election, maybe what has been priced in, what has not been priced in ahead of the election in 2 weeks. How does it compare to what we saw 4 years ago?
It's very similar. So in the past 2 elections, we've had roughly, call it a kind of a 10-vol jump in that month of October, leading into the November election. And so it's been very similar this time around if you look at that implied vol structure. And so it just, what we're seeing on the exchange floor is just that level of uncertainty, and hedging really is being, seen in the form of SPX put buying and VIX call buying. And that is just to be prepared for kind of that unknown. VIX is a great hedge in this situation, given the absolute level of VIX. Like we talked about, we're hovering right around the long-term historical average. Just a few weeks ago when we saw heavy call buying, the VIX was actually lower than it is today. And with that, you have this absolute level of the VIX can double at any point given uncertainty hitting the market. So the move from, call it 18 to 36 is a very possible move where you get a lot of bang for your buck out of VIX options, out of VIX call options in particular. So that's where we're seeing it kind of translate as coming into the market through SPX downside put buying and really VIX call buying. We've had record volumes all year in VIX options, and I think this is a big catalyst as to why.
Yeah, and perhaps, Rob, investors hedging potential upside movement as well. I really appreciate you joining us, Rob. Thank you so much.
Thanks for having me.